Good morning, everyone. It was a wild day yesterday. Good morning, McGraw and everybody. So, as we all know, that nasty gap down was bought. We covered where it was gapping down to and went up. Well, we'll get to the gap. But anyway, it came up into the resistance and then collapsed. There was some news. Some Fed official said something, and that was the reason anyway that things sold off. And so what actually ended at the end of the day, we're looking at the futures now. What it looked like in the morning, that nastiness with the gap at the end of the day wound up, oh geez, my brain in these charts. I'm sorry, guys. There you go. Just ended up the way it looked in the morning. It just was a wild ride, the gap down and all the way back, which now has created, what we call a void. So now put that all in perspective of what's occurred and what theoretically should happen. So our bias has been, we got the nasty move. It was powerful. Our internals got set up here. We got the bounce. And at that point, we were looking for something like this or the higher low, higher high, and the rollover. We're looking at the futures now, right? We've got big wide range nasty bar. Right? It's going to have a gap on the other side, but we want to see that it stays in the lower half. Now, this provides us with a bias that it's going to break here and go lower here or lower unless something changes. What would that something be? Getting back above the high of the red bar or deeply into it. That's the factory work. So now, as you see, the futures, they were down earlier, negative, and now they're bouncing up. So while there's nothing here as we look to the left and even looking at a smaller time frame, as we open up the time frame, we get to see more data. And so, just looking at what's occurred here, that should be where sellers want to show up. So we see the bottoming pattern on the 15-minute. It changes the trend on the 15-minute and higher low, and now it's moving up. And so somewhere in here is where sellers should want to show up, because if it gets above here, well, let me back up. It could get above here. So based on our factory work, MTS, so on and so forth, it can get above here intraday, but the closing prices, the opening closing prices have to stay in the lower half and ideally in the lower third. So as it approaches here, and we'll apply this to the spiders, as it approaches around this level is where we want to see topping pattern to set up a short. Well, so I'm thinking, just based on this trading range, that we're not going to get below there today. We'll see if that actually sets up, because as you can see, we've got a trading range and a void and things are bouncing up. We'll see how far it goes to where shorts want to enter. And we'll look at, the 5-minute to see as the momentum slows, or the 15, your choice. And, looking for things to set up shorts going into next week. Again, we're in this area where it could be a here Monday, whatever, but the thinking is eventually it's going to crack and go down unless it gets all the way back up again. And so just like looking at this and what I explained, 2 weeks ago and into this week, as to what should happen, right, that's what we're doing now, going a little further. And now we're going to see what actually happens. All right. So there's no crystal ball that tells the future here. It's just historical prices as to what should happen and probabilities, and we'll see how it plays out. Internals. We'll take a look at those internals here. That would make sense. Where are they at? So breadth actually made the higher low, higher high and got up to 100. Okay. So a lot of times this does form patterns. So it's up at high enough to where it supports thinking things could go lower. And after a crack like this, most of the time sentiment does not get up to an extreme. Now, it could, but that's typically what doesn't happen, just as breadth typically doesn't get back up to 200. And it makes a lower high and then goes back down again. So looking at the internals, if the scenario plays out and it cracks, this should come down, which it hasn't been down here at 1.2 in quite a long time. And I've spoken, as to how these bands are now adjusting for the current market environment, becoming more bearish, which started last year. Now, it wasn't apparent because it was so slight, the bands making adjustments. And then, we got the sell set up here and then another, and then now we got the crack. And so this should, it should make a lower high, and eventually this will come lower. And as the market evolves in a more bearish way, right, this will, the bands will do its job as to, determining these buy and sell points. In a very bearish market or a bear market, this can come down to 1.4. Now, we haven't seen that in years. So, as we do, we'll update this as time evolves and what's happening. And so that's just part of what we call our factory work. All right. It guides us rather than, hey, we have these probabilities, our bias. And part of what we do with factory work is having tools that force us to change. So while this move was powerful, right, it didn't really change our bias that this should create some type of a topping pattern because of the extent of this move down. So now we have a bias that it should break here. We got to bounce. And so, even though this could end the day with a bottoming tail bar, that's not going to change our bias that this at some point is going to crack. It's just come down really far, really fast, created a void, and intraday traders are trading that. And at some point, the bigger bias will take hold and it'll break. Simple to do the analysis, sometimes not so simple to trade it because of the whip, unless this is going to require a big stop. So what we're looking for today is to put on a position, as I said, somewhere around here, and then sit through whatever the wiggles are. To find an exact moment in time is very difficult and stressful. And I like to use the term brain damage. All right. Dow did make the higher high, same crack yesterday, bottom of the range, bouncing back up here. We'll see how it plays out. Same story. Qs, different, but the same to some extent. Made a lower high. The S&Ps made a equal high. The Dow made a higher high, which says this is showing relative weakness, which we know from the past how it went down, and so on. So if it closes 45, 40, 50, okay, so I was talking about the futures, 45, 40, 45, 40, 50, that would put some doubt into our bias here, McGraw, right? It wouldn't change it completely, but it would certainly put some doubt. And then, we'd go into Monday thinking, geez, if this could clear this high, my thought would then be that this is creating another trading range, and I'm not so sure whether it can get above here or whether it's just wild volatility. Yeah, so we only have what is in the moment and guide us to what may happen, and then we'll see how it plays out. Look, I had my doubts, when this bar formed and it went up like that. Well, I still thought, hey, higher high, lower, higher low, higher high, roll over. The power of this move certainly puts doubt in it. And now you're sitting there saying, no, let's see what happens. So it's the same thing if it closed up here. We go into Monday like, well, that's not ideal. Well, let's see what Monday brings. We'd all like to know for sure what's going to happen tomorrow. And, we can mortgage the house and take advantage of it. All right. So SPX, based on yesterday's move, it inflates the premiums that provides us with what I like to call a no-brainer. And so when I looked a little while ago, and I'm sure some of this premium went away, but there was no-brainer trades down at 43.50, 43.45. So maybe, it's going to be 43.50, 55.60. In any event, just based on what I've already said, I don't see it breaking significantly below this range here. Right? 43.95. 43.95. Well, of course, there's some real good juice there, McGraw, and that's attractive. And yeah, there's a lot of open interest at 4,400, and that is so. For those of you that may not be aware or haven't been part of our discussions here with options and SPX and all of that, I like to use the term we look for lines of defense. Right? What's our lines of defense? That's where buyers are going to show up that are going to defend that put spread, not necessarily with that intent, but there'll be bounces there. So that's the 200 MA. That is this pivot. That is the trading range. That's this whole number. That's the big open interest at that whole number. So there's a whole lot that sellers have to be able to push through to harm us. So down here, I would say that is a no-brainer. It ain't going there today unless they come out and raise interest rates today, which I don't think the Fed's going to come and ruin the weekend, right? So that's our assumption. Now, coming down here should be a no-brainer because of our lines of defense and what I've explained. Now, if you want to go for the big juice, that's a personal choice. There's nothing to stop it once it breaks here other than these subjective reference points. Where's the 200? Where's that open interest? You want to go for it? Go ahead. It's not a right or wrong. That's a personal trading choice and risk, your own personal risk that you're willing to take to make more money. And that's part of the psychology of what we do is like, look, we all look at these charts and whatever we're looking at to come to a conclusion as to we are right? And we're risking X amount of dollars because we believe some degree, ultimate certainty that we are right. And so if you take on too much risk, your psychology is going to be skewed by that. And you got to be careful with that because now you go into hope mode and rationalizing things that, rather than what's really on the chart. Yeah. Okay, McGraw saying there's an emergency Fed meeting today. Oh, on Monday at 11. All right. So, we got 0 DTE day, right? So, as far as Monday goes, who cares? But thank you for sharing that. All right, let's see what else is that we haven't covered. All right, this has been weaker. We got the higher high. So just based on higher low, higher high, it showed relative strength to the NASDAQ. But, it hit our reference point and rolled back over. Bitcoin, up at resistance to 200, stall there. There has been some correlation between the high in the stock market and, following each other to lesser degree recently. Oil still strong, holding up after the slowing momentum. I'm just chopping around here. Silver correcting a bit. This is kind of, so let me just share. This is what we do here. Dan and I share our thoughts and experience. So when I look at this pattern, first of all, for a head and shoulders, that is a huge move up to create a head. It's usually not that way. Now, with this inflation scenario, which we know there is, right? What I heard this morning, highest inflation in 40 years. Um, with that thought in mind, gold, silver, inflation, yada, yada. This head and shoulders pattern should fail, and it should roll or flip back up here, creating a opportunity for this to go back up to the high. So we'll watch for that next week. Gold has been stronger, deeper into the void. Earlier in the week, I talked about this was a good looking setup for a long, based not so much on the futures, which are pretty erratic, more so on GLD, which was, a bit cleaner with that bottoming tail bar and the area that it needed to clear. Right? And interestingly, some things that we don't look at all that often was the fact that while interest rates are spiking up, the dollar came not really crashing, but it came down pretty hard, and it's whipping around here now at the bottom of the range, which of course made the euro, after breaking below the lows, spike all the way back up again. So this is something we'll be keeping an eye on to see how this unfolds here, because of, typically with short-term interest rates ripping like that, the dollar typically stays strong. But, we'll see. These correlations aren't always perfectly in lockstep with each other. So moving here, the VIX. So if the market is going to roll over, this is going to spike up. And if we'll see how this unfolds, what happens today and into next week, we set alarms at prior swing highs as to possible turning points. So as this goes up, market goes down. And then, this may reach a high before a market reaches a low. So, and this has been the case forever, for decades that I've been doing this, that there are times where the markets may, I don't know that they're going to make a higher low. I'm hoping it makes a lower low here, but this may come down and there will be no support. I mean, I've seen situations where the S&Ps have broken down below and they look like they're going to go much lower. And the VIX was up near an extreme, which was then supporting, hey, probably this bearishness is overdone and the S&Ps aren't going to go down into the void below. So we'll see how it plays out. As you do this longer and longer, you see different market environments and different things that set up that aren't always totally lined up with the most apparent things, what's to the left. So as it unfolds, we'll share it. And there you go. All right. Glenn, I'm just seeing your comments there in YouTube. I did cover SPX. I don't know if you came in later. I'm just reading the comments there late. But down here in this area is what I would consider a no-brainer put spread. Right. All yours, Dan.
Good morning. Happy DTE Day. So the Dow was down 300, and I guess pre-market, and I guess some of the is slowly creeping back. I'm assuming, a lot of it was the pushback on Bullard, whatever. But I told David yesterday I would love an inside day, bounce a little bit to the areas where Greg talked about. But I would love zero DT. I'd love range bound where we can put on both call and put spreads of zero DTE, and then go back to that shorting party idea for next week. And that would be perfectly timed with this Fed meeting. And so McGraw, I was saying, I'm just talking out of common sense. Like, they aren't going to, what are they going to talk about? Is it going to be good, bad, or neutral? you know, I'm kind of thinking it's going to be more on the bearish news side, but we'll trade the carrots as always. All right, we were trimming a lot of merchandise yesterday, taking profits, trailing stops, a couple of break evens. So all our opens are fine here. Let's go right to gappers and earnings. So detective, get your pen ready. 67. Wow, it's right, range bound. This actually could be a condor. If you could do the 55 and then 82s, that's a condor when things gap right to the middle. But you know, I don't know in terms of a nice little DT, a zero DTE. Dominic asking about cold short. Well, I don't think it's going to trigger. It's quite a gapper, natural gas, but this is a bullish pre-market. So I personally don't think it's going to take out yesterday's low based on that pre-market, but if it does, sure. Bravo Lima 80-50. That would be a bear call spread, detective, but you're going to get no juice is the problem. It's so far away. So Greg mentioned SSO as a levered spider that we can short. This looks like penny stock toy. It looks like well, actually it looks like a SPAC. When they kind of just go flatlined at the $10 level and then come out of the coma, that's a SPAC. It looks like a wild day trade chart. This we entered yesterday, GRWG, a little marijuana stock, and it looks great. Looks great. You can add to it. Looks fantastic. Cliff Clavin earnings gapping down, sell setup. So detective definite call spread. And this one, we might even have a next week call spread because that's an ugly gap under a green bar, sell set up at resistance. So that looks great as a call spread. My alarm is going off here on Beam. This was on our long list yesterday. I see one print up here, so I don't trust it. And this little ACB had earnings. Shannon got me into this thing without telling me, so her membership in the green room is kind of questionable right now. This firm, they early released by mistake the earnings yesterday. It's gapping down more today, so that'd be a call spread candidate. Detective Zen. I don't know. Wow, that was right into the close. Right into the close. That's the picture of that. Also looks like a release of a pre-accidental release of earnings. Doesn't this look almost exactly opposite of firm? So that's a put spread candidate, detective. Yelp 3650. All right, this is a nice gap over 2 bars. It's not a great price void, but it's a great put spread candidate if the gap holds up. So that's a beautiful one for a put spread. And that's so beautiful, depending on how far out we go, detective. We could even do 7 DTE on that. A bear gap here. So here's a 0 DTE, detective. I hope you're writing all these down. Yesterday's high, 0 DTE, 10-minute low. There you go. I just gave you a trade. It was on earnings, but provided what? Liquid options, good juice. Those are the other two. We got the pattern. We got earnings out of the way. 10-minute low. Provided, like I said. VeriSign, I can't tell the gap, but yesterday's low call spread. Today's Friday, so over Wednesday's high. 30-minute low. This is even a candidate to do a 70 TE. All right. So I'm telling you, these are all zero, unless I'm telling you it's also a candidate for weekly. Gapping down here, seeing two prints. I don't know. We'll come back to you. Manpower, very bullish gap here. So this one is a beautiful put spread. I'm going to put that in my other window. Hey, Greg, I thought manpower is not socially acceptable anymore. Don't they need to, where's Jesse Jackson? Don't you need to call this people power? That's very discriminatory name right there. Hubs, we were watching this one for a while as a beautiful bottoming pattern. And, we didn't want to hold over earnings, but that's a big gap after 5 green bars. So GoDaddy 80. All right, here you go. Here's another shock gap. So that's a pro gap if it holds. Look, you got all these flat MAs. You had a bearish lower low, lower high close, and it's gapping over all these bars. So if the gap holds, and you know the process, we got a compelling daily, putting it in a 5-minute window, and we're going to see what it does in the first half hour. But that's a beautiful put spread candidate, even for next week. Kohu, I can't tell. Net gapped up to yesterday's high coming in. We'll come back to you. Adlar, here you go. Another beautiful gapper put spread. Detective, you didn't know when you joined the room that you're my assistant. That's a nice one. Albert. Oh, just so you all know, I don't know if I gave it to you. I posted Greg's trade. Where are you? Osh. I posted this long, double bottom. So yesterday's high, you can buy that. Bravo Lima, we looked at you already. Valet, that could be a 0 DTE if there's any juice. This was a beautiful 1, 2, 3, and then the gap down, but it's gapping down now on earnings. Well, it'll be interesting if it can recover. RSG, I can't tell where you're gapping, but over yesterday's high, detective, put spread, RSG, Charlie, ugly gap down to 32. That's a call spread idea, but the problem is you got to get, too far away. NVAX, yesterday's high, 0 DTE put spread. Illumina call spread, detective, if there's, I doubt there's going to be anything at 370, 0 DTE. And you probably don't even need to look at options in the first 5 minutes because we're not ready to put on a trade. So you got to let the spreads contract a little bit and let things settle down. Cliff Clavin here, middle chart. Not rushing into it. Bravo Echo, there's a bottoming pattern. 5, 10, 15, 30-minute high, I don't know. That's a bottoming pattern. Zulu, bullish, but gap's too big. Zulu Golf, same. Urban. All right, thanks. Urban, earnings, no pattern. Mohawk, it's trying, but it has to break out because I don't have a shock bar. I don't have a continuation pattern. I don't have a something bar. All right, some of these that I put in 5-minute windows. Yelp is holding well, but it has, we'll see, detective, see if there's any, well, I'll look at the 35s, 0 DTE. Yelp, well, they have no, all right, see, the two problems. They don't have 0 DTE, number one. Number two, the 35s are 15 cents by 95. See, these option market makers are just freaking jerks at the open, particularly with the earnings. All right, Greg, we really missed this, reopening trade this week. I know we talked about it, but Expedia here is in the travel sector, the cruise ships, the jets, the hotels. Look at this beautiful entry right here on Monday. Or that's Tuesday, rather. Tuesday. You had a bullish engulfing after 100% retracement. That is a no-brainer entry. But now it looks like a 0 DTE call spread. GoDaddy new high. Check that one out, detective. I'm checking Expedia.